Hey, what's up everyone? How we doing? It's Robert with McDougal Insurance here in Norman, and what I wanted to do was just basically go over 10 insurance terms and what they mean. So insurance kind of has a different lingo about it, and it gets confusing at times as to what the lingo is saying or the verbiage is, but really it's just a fancy way of saying some words that we're all used to. So 10 things or 10 terms that you should know in regards to insurance. If that's of interest to you, stick around. I guess you're still here, so it may be of interest to you of what these 10 things are that I'm referring to. Okay, so starting off with number 1, and I'm going to make a list because I don't want to go over the same thing twice or 3 times, because I can do that very well. Okay, so when we talk about insurance and we talk about lingo, we talk about verbiage that we're not used to, right? Or not so familiar with. So the first one I'm going to write down is premium. So this may be simple, but what premium means with insurance is just basically that's your payment. So whether it's a monthly premium, an annual premium, a quarterly premium, it's your monthly payment. So it's just another fancy word for that in the insurance realm. Number 2 is going to be underwriting. So underwriting is basically what happens with insurance companies when they look to assess a risk. And what I mean by that is when they look at what they're looking to insure, it is underwritten. Like for instance, in a health application, people might be asked what their health condition is, if they've had a heart attack, multiple questions about different health scenarios. That's underwriting. That's giving that company an idea of what they're insuring and how and if they're going to insure it. So when someone says, I'm sending this to underwriting or something like that, what they mean is they're sending it to the individuals who would actually be of help. So number 3 is deductible, and that one may be simple too, but never know. Deductible just means that you have a amount that you have to hit before your insurance actually kicks in. So for instance, if you have a homeowner's insurance deductible and you had a fire, and on your dwelling part A of your home policy, you had a loss of, we'll say, $40,000. Assuming it's a replacement cost policy, and I don't want to get far into all that stuff, but assuming it's a replacement cost policy, the individual would get back $40,000 minus their deductible, whatever it is. Now, if it's a smaller situation, then yeah, they might have to come out of pocket to meet that in order for the insurance company to react. However, that's the way a deductible works. A deductible is simply money that you are responsible for before the insurance company is even really relevant. Number 4 would be lapse. What lapse mean is you have like a lapse in coverage. So for instance, this mainly pertains to auto insurance. So if you're an individual who has had auto insurance but then dropped auto insurance for a day, a week, a month, a year, a few years, you have a lapse, you have a gap in your coverage, or you don't have any coverage. So when we talk about a lapse in coverage, it just means there was a break somewhere within the coverage that you had. So for instance, if you had a 6-month policy and somewhere within that 6 month you didn't pay your premium and you lapsed, you would be on the verge of losing your policy. So number 5 is going to be called term. And what I mean by term is when you do like a auto policy, an auto insurance policy, you get either a 6-month or 12-month term option. Now, all that means is that a term is a specific time frame for an insurance company. If you talk about like life insurance products, term insurance, they're talking like 10, 15, 20, 30 years, specific numbers for terms for coverage, okay? So they're just giving you, the word term just means a specific amount of time. So in the insurance world, when you hear you have a 6-month term, that means on your auto, every 6 months, it is going to reevaluate your situation and go from there. So in other words, in 6 months after you signed up with your policy, if you saw your rates go up, that's likely because something happened, whether it be personally you or in your area, that affected that, right? If the rates go down, then that's good. That means everyone's doing their part. If the rates stay steady, then that's good too, which is typically what happens. There's typically an increase slightly or a decrease slightly. And there's not always a specific explanation for that. So, but that would be number 5. Long story short, term. Number 6 is death benefit. So what death benefit means is really plain and simple of what it says, or what it sounds like. Death benefit. So no one really benefits from death. Now there's your Carol Baskins of the world or whoever that have not benefited from death but maybe have been suspected of that kind of thing. I don't know where I was going with that, but death benefit. So death benefit, if someone was to pass away and they have a life policy or some kind of death benefit, right? That just means that it's typically a lump sum of money that's going to go to a beneficiary in the event of a death. Okay, number 7, what we're going to go over is what's called rate. You hear people say, I can get you a better rate, or I can get you a better rate, or I can get you a lot better rate. It is like it sounds, it's your rate. But what's important about the word rate is that there's a lot of things that factor into your rating, right? So when insurance companies look at insuring someone or something, they're looking at the zip code, the history of that zip code, that person's credit, who that person's spouse is, that spouse's credit, the driving record. All that stuff is going to go into factor with the rate. The age, if you're talking about health insurance and you're going through underwriting, your health is going to be a determination on what rate you are given via your proposal or your quote, right? Because underwriting will ask the questions and then you're provided with a acceptance with a rate of premium, monthly, we'll say, or you're denied, which hopefully doesn't happen. But that is what rate is. It's very easy to understand as far as a simple term rate, but there are a lot of factors to go into what your rate is. Alright, number 8 is one that may be obvious too, and I'm not really doing these in any hierarchy. I'm just really pulling 10 out of the air that I think are important. But basically it's liability. So when it comes to liability, insurance is more of a risk management business. It's in the financial industry, yes, but it's specifically like a risk management type of thing. With liability is there to help you if you are liable for something you did. So in other words, on your auto insurance, you have auto liability. Liability for something you do in your auto. So coverage for something you do in your auto. If you're at fault, you're liable. Your liability limits are going to kick in. That's why we legally have to have them here in Oklahoma, is because they need to be there in the event I crash and total someone's car out or hurt them or something to give them or compensate them, or else I'm getting sued. So without liability, I'm exposed, or that person's exposed. Now that's your auto insurance liability. Your home insurance liability is very similar. So you're protecting yourself from being sued via something happening on your home, right? So really in that sense I say that, but whatever's being brought to you, that is pretty much a case for your home insurance to cover you via liability, unless it's specific to like an auto or something that would have it distinctly in its policy for that loss and liability. But not to confuse you, liability just means you're liable. Number 9 is what is called the maximum out of pocket. Okay, so you hear this term a lot in health insurance, but basically maximum out of pocket means you couldn't come out of your pocket a maximum of more than X amount of dollars. So if the maximum out of pocket in an annual year is $5,500, that means that you can't come out of pocket more than $5,500 towards your plan, right? And once you do, your plan should kick in and pay 100%. Every plan is going to be different. I'm really talking about health insurance in this sense, but basically if you have co-pays, deductibles, or co-insurances, they all go towards what is a maximum out of pocket, meaning the most times you could reach in your pocket and pull out money. If you reach that in your pocket throughout a year, or sign a check or swipe the card or however you did it, and hit that number, $5,500, whatever it is. And number 10, the last thing is just simply peril. So I had a real hard time understanding this, and I don't know why, when I was first trying to understand and learn insurance. But I was like, what is a peril? I was thinking something that holds like a dock up that's out in the water by the ocean. Like, is that a peril? And then of course I'm like, no, that's not what the book is saying a peril is. But a peril is basically anything that could happen. Okay, so like fire is a peril, theft is a peril, wind and hail is a peril, lightning is a peril, volcanoes are a peril, sinkholes are somewhat a peril because most times they're not covered. Anything that could happen to your home is considered a peril. So when you look at your deductible, it would say all perils X amount, and then it might have like a percentage to wind and hail, or just a percentage in general. But point is, perils just mean exposures that could happen to the insured. Alright everyone, having said that, I hope you learned something. I hope that wasn't too much information. But if you have any questions, feel free to give us a call or check out the website. Like and subscribe to our YouTube channel. We're going to be bringing up a lot more information about insurance, because I know everyone is dying to get their hands or their ears filled with this information. But anyway, thank you for watching, and I do appreciate your time, and I hope you have a wonderful day and stay safe. Bye-bye.